We predict that these technologies will enable the global equity markets to grow from their current size of $8 trillion to $210 trillion by 2030. The remarkable thing about today's youth is how many of them are born digital, born tech-savvy, and born aware of how technology can improve our lives and solve problems. But do they recognize the danger? After the past 18 months, I believe they do. But even before that, when we were entering COVID, we were down 46% in a single month. You can see that there have been phases of risk on and risk off if you look over ARK's entire existence, which has been about 8 years at this point. And since our clients are aware that you average down into times like these, our asset retention has been excellent. Additionally, they are aware of the fact that our funds offer a level of disruptive innovation that is lacking in the many benchmarks and indexes that they are studying. We are excellent at diversifying. We believe that we can help diversify most people's and institutions' access to really disruptive innovation. Passive investing and benchmark-sensitive investing have been more prevalent over the past 22 years. The reason is that due to the tech and telecom busts, which occurred twice between 2008 and 2009, many people saw that passive indexes were outperforming investors who actively manage their portfolios. That was a component of a self-fulfilling prophecy, I suppose. If the pendulum is swinging in favor of these benchmarks and the passive, they will likely outperform. But if we are correct, we will have 5 innovation platforms and 14 technologies for the first time in history. The opportunities for exponential expansion, the seeds of which were sown more than 20 years ago, are now ready for prime time. That indicates that the established world order will be disturbed. How? These 5 innovation platforms will have an impact on every industry, company, and area. We use our study to ensure that the index we use to screen our portfolios does not have a retroactive focus, because doing so would be counterproductive, right? Our research is displayed on the screen, which we make available to customers and others, so they can see why we invest in these technologies and why we believe they are crucial to being on the right side of change. A component of our mantra is this. Many individuals mistakenly believe they are familiar with our types of strategies, such as disruptive innovation in the Nasdaq 100, for example. If you look at that index, you will see the FAANGs, NVIDIA, and good firm Tesla. We own the last 2, but our flagship strategy hasn't owned the FAANGs in a while. If individuals desire innovation, they should invest in someone who can give it to them, not in a hedge. They can hedge with cash or with the help of their advisors.
Let me know in the comments if you have any other questions about investing. Let's return to the video.
Who are the big important banking clients of these banks? If you consider that innovation is likely to upend the established world order. The established world order gives them a lot of business, but these smaller businesses are following closely behind and are essentially discarding them. We are the only business, in my opinion, conducting in-depth research on truly disruptive innovation. Additionally, we are performing a task that typical research businesses no longer perform. They did back when I first entered the industry. For our public portfolios, we have a 5-year investment time horizon in mind. However, the time horizon for our public-private crossover fund is currently longer. This kind of extremely short-term behavior, which has driven management teams to essentially cater to short-term desires, like buying back shares and paying dividends instead of investing in innovation, is what the market lacks. I absolutely think that during the last 20 years, there has been the greatest misallocation of capital in human history. What is this indexation-related movement? Putting money into the past. Because of prior success, the businesses at the top of these significant benchmarks are there. If our assumptions are correct and there are 5 innovation platforms with 14 different technologies evolving simultaneously, and S-curves are going to be feeding S-curves as they converge, then we believe the conventional world order will be badly disrupted, if not entirely destroyed. we concentrate on a concept known as Wright's Law. Moore's Law is related to Wright's Law. Wright's Law is more effective in the semiconductor business than Moore's Law is. And Moore's Law is a function of time, whereas Wright's Law is a function of units. These days, we focus our study on determining how technological learning curves will translate into cost reductions and how quickly these technologies will be accessible to the general public at an affordable price. We do this technology by technology. We used to refer to it as the genomic revolution or DNA sequencing, but there are currently 5 key platforms. Now, because we're dealing with more than just DNA and RNA, proteins, and other biological processes, we refer to it as multi-omics. This will, in our opinion, result in the development of disease cures. With CRISPR gene editing in beta and ATT treatments for sickle cell disease and thalassemia, we can already observe this. And one of the businesses in our portfolio is confident that they will have the treatment for diabetes, which is currently one of the greatest expenses in the global healthcare system. Therefore, multi-omics robotics, which we do not believe will replace jobs as much as it will increase human productivity, particularly collaborative robots that are surrounded in sensors, energy storage, so electric vehicles, artificial intelligence, is more likely to lead to the rise of electric vehicles. Our estimations show a 60% annual decline in the cost of artificial intelligence training, and even we are surprised by the advances in AI. We anticipated, for instance, that computer programmers would become more productive thanks to AI and something called Copilot today. It occurred in 6 months instead of 10, making it extremely disruptive. And the final one is blockchain technology, which, if you recall, was at the height of the IT and telecom boom at the time this article was written. In essence, blockchain technology fills the gaps that the internet had when we didn't realize how much commerce would be involved. Wright's Law states that for every cumulative doubling of units produced, costs must decrease at a constant rate for each technology. For example, DNA sequencing costs $40, long-read sequencing costs $28, robotics costs 50%, and battery technology costs 28%. We're beginning to understand what artificial intelligence is, as I just mentioned, but training costs for it are falling by 6% annually, and these developments are truly astonishing.
Hope you have learned something from this video. What are your thoughts? Comment down below. If you enjoyed this video, make sure to click the like button, and also don't forget to subscribe to the channel and hit the notification bell for you to be updated on our latest videos. See you in the next video. Thanks for watching. Want to learn more and be more financially literate? Click on the next videos we have in our channel, showing on the screen right now.